Indonesia, a land of breathtaking nature and rich culture. There are many things Indonesians are proud of. One-of-a-kind photogenic spots spread all over the nation, unique wildlife, magnificent cultural heritage, and the most recent one, the G20 Presidency. Indonesia is proud to hold the 2022 G20 Presidency. As a multilateral forum connecting the world's major economies, the G20 holds a strategic role in securing global economic growth and stability. Together, the G20 members represent more than 80% of world GDP, 75% of international trade, and 60% of the world population. And 2022 is the year that Indonesia plays a major role in leading the G20 discussions on various global issues. Not an easy task amid a global pandemic that still continues after more than 2 years. Holding the presidency in this unique moment where countries are struggling to bounce back from COVID-19, Indonesia introduces Recover Together, Recover Stronger as the main theme of its presidency. As a step toward an even, sustainable recovery, 6 priority agendas are introduced in the finance track. Exit strategy to support recovery, addressing scarring effect to secure future growth, payment systems in the digital era, sustainable finance, digital financial inclusion, and international taxation. Through these agendas, the Indonesian presidency aims to engage all G20 members and invitees in discussions and deliberations that goes beyond just the interest of advanced economies. Considerations also need to be put for other countries that may still be struggling to manage the pandemic. Because coming out of the pandemic, no one should be left behind. Recover together, recover stronger.
Behold, the beauty that is Indonesia, Mother Nature's gift of serene and colorful landscapes, where diversity makes us one, united towards a common goal, where resiliency is achieved together. A strong infrastructure governance arising, where investments are waiting to flourish, and where creativity is inspired by tradition. Indonesia, where beautiful possibilities are offered.
Indonesia, a land of breathtaking nature and rich culture. There are many things Indonesians are proud of. One-of-a-kind photogenic spots spread all over the nation, unique wildlife, magnificent cultural heritage, and the most recent one, the G20 Presidency. Indonesia is proud to hold the 2022 G20 Presidency. As a multilateral forum connecting the world's major economies, the G20 holds a strategic role in securing global economic growth and stability. Together, the G20 members represent more than 80% of world GDP, 75% of international trade, and 60% of the world population. And 2022 is the year that Indonesia plays a major role in leading the G20 discussions on various global issues. Not an easy task amid a global pandemic that still continues after more than 2 years. Holding the presidency in this unique moment where countries are struggling to bounce back from COVID-19, Indonesia introduces Recover Together, Recover Stronger as the main theme of its presidency. As a step toward an even, sustainable recovery, 6 priority agendas are introduced in the finance track. Exit strategy to support recovery, addressing scarring effect to secure future growth, payment systems in the digital era, sustainable finance, digital financial inclusion, and international taxation. Through these agendas, the Indonesian presidency aims to engage all G20 members and invitees in discussions and deliberations that goes beyond just the interest of advanced economies. Considerations also need to be put for other countries that may still be struggling to manage the pandemic. Because coming out of the pandemic, no one should be left behind. Recover together, recover stronger.
Behold, the beauty that is Indonesia, Mother Nature's gift of serene and colorful landscapes, where diversity makes us one, united towards a common goal, where resiliency is achieved together. A strong infrastructure governance arising, where investments are waiting to flourish, and where creativity
Assalamualaikum warahmatullahi wabarakatuh. Shalom, Om Swastiastu, Namo Buddhaya, Salam Kebajikan. Allow me Nadira Titalia to be your host for today's event. Before we start, allow me to greet the Honorable Governor of Bank Indonesia, His Excellency Mr. Peri Warjio, First Deputy Managing Director of IMF, Ms. Gita Gopinath, Board of Governor of Bank Indonesia, Honorable Central Bank's Governor from partner countries, distinguished speakers, all of our respected guests who are here with us in Fairmont Hotel Jakarta, and all audience attending this event via virtual platform. A very good morning to all of you, and welcome to the high-level discussion of strengthening economic recovery amidst heightened uncertainty. Ladies and gentlemen, the global economic recovery is continuing. However, new waves of COVID-19 infections and the emergence of new variants are impacting the pace of our recovery. On the structural issues and the scarring effects of the pandemic still lingers, and productivity push is currently needed. Ladies and gentlemen, today's discussion will be divided into two sessions. The first session, we will talk about global economic outlook and the role of Indonesian G20 Presidency, we will have two esteemed speakers, the Honorable Governor of Bank Indonesia and the First Deputy Managing Director of IMF. The first session will be moderated by the alternate Executive Director of IMF and will be broadcasted live from Washington, D.C. Then in the second session, we will talk about the global economic recovery and its implication for Indonesia. This session, we will have three distinguished speakers, Senior Deputy Governor of Bank Indonesia, Chairman of Indonesia Chamber of Commerce, and Lead Advisor at Prospera. This session will be moderated by Indonesian journalist Ms. Kania Sutisnawinata and broadcasted live from Jakarta. All right, ladies and gentlemen, without further ado, let us give a warm welcome to our moderator, the alternate Executive Director of the IMF. Please welcome Mr. Firman Mohtar.
Thank you, Nazira, for the warm introduction, and a very good morning to everyone in Jakarta. A warm greeting from us here in Washington, D.C. To start the discussion, allow me to share a little bit about what's happening in Washington, D.C. this week. Starting Monday, the 2022 IMF World Bank Spring Meeting is being held in Washington, D.C. Throughout this event, the IMF conduct many important agenda, including publishing their flagship publication on the World Economic Outlook, Global Financial Stability Report, and Fiscal Monitor on Tuesday, April 19, as well as delivering their global policy agenda for the year ahead, which addresses the global economic challenges. The latter was delivered in the IMFC plenary this morning, DC time. Back to those meetings, last Wednesday, Indonesia 2022 G20 Presidency also being held a high-level meeting in the finance track, attended by finance minister and their central bank governors. Today, we are very fortunate to have opportunity to hear directly from two distinguished speakers who were fully involved in those events. First, joining me live from the studio in Washington, D.C., Governor of Bank Indonesia, Bapak Peri Warjio. And the second speaker, joining virtually from the IMF headquarters, the first Deputy Managing Director of the IMF, Ms. Gita Gopinath. All right, today's discussion will begin with 15 minutes allocated to each speaker. From there, we will continue to the Q&A session before concluding to the discussion. Now, let's start with Governor Peri. Governor Peri, would you mind sharing a brief update on what progress was achieved during the last Wednesday G20 meeting, and probably the implication for the supporting the economic recovery? Governor Peri, you have 15 minutes. The stage is yours.
Okay, thank you, Mr. Firman Mohtar, and very good morning for my friend in Jakarta. It's my pleasure to share with you what the outcome of the second G20 finance minister and central bank governors that we had on the 20th April in DC. This is the second time after the successful first meeting in Jakarta, February 2022. Well, this second meeting is different because we have a meeting under the challenging circumstances as the Russia war against Ukraine amplify the complexity on how as G20 to nurture the global economic recovery. Members share the view that the war hinder the global recovery process, raising particular concern about food and energy supply. Low income and vulnerable countries particularly affected as They already facing challenges, among others, limited fiscal space and high debt vulnerability. The meeting discussed four main agenda. One, global economic recovery. Second, global health issue. Third, international financial architecture. And the fourth, sustainable finance. Let me share with you the four agenda result of the meeting. First, on the global economic and outlook and risk. Members underline the crucial role of the G20 as the premier forum for international economic cooperation to deal with the current multifaceted and complex global economic challenges, including the implication of Russia war against Ukraine. Most members supported the existing agenda of G20 to address the economic impacts of the war in Ukraine while still maintaining a commitment to lead the world back to strong, sustainable, balanced, and inclusive growth. There are concerns, of course, about inflation pressure, leading to central bank raising their policy rate and faster than expected tightening of global liquidity. The members reiterated the commitment back in February to deliver a well-calibrated, well-planned, and well-communicated exit strategy to support the recovery and mitigate against potential spillover. It undermines the global efforts in addressing pre-existing global economic challenges, including health, pandemic, preparedness and response, high debt and vulnerable countries, and climate change mitigation and adaptation. On the global health, members agree that collective and coordination action to get the pandemic under control remains priority. There was broad agreement for the World Health Organization, WHO, and the World Bank assessment on the significant financing gaps that need to be addressed, and that the G20 must act to address those gaps. Most members in meeting also agree on the need for a new financing mechanism dedicated as pandemic preparedness response financing gap. And many concur with the World Bank and WHO assessment that a financial intermediary fund housed at the World Bank is the most effective option for a new financing mechanism. On the international financial system, ministers and governors reiterated their commitment to support vulnerable countries, particularly those at risk of debt distress. There is concern on the slow progress in the implementation of common framework and call for the next step to be more timely, orderly, and predictability. Members welcome the establishment of the Resilient and Sustainable Trust, RST, and encourage further pledges toward the global ambition of $100 billion on this trust fund of voluntary contribution for countries in need. In addition, members also share the view on way forward for countries to enhance resilience and support recovery with regard to capital flows volatility, building on the work by the IMF integrated policy framework and jointly working together with BIS macro financial stability policy framework. Those will equip many countries, including emerging countries, to better prepare for global spillover. Against this background, members reaffirm the commitment to a strong and effective global financial safety net with a quota-based and adequately reassure IMF at a center and timely conclusion of the 16th General Review of Quota by 15 December 2023. Last but not least, on the sustainable finance, Minister and Governor underline for a green, resilient, and inclusive global economic recovery and the achievement of the 2030 Agenda for Sustainable Development. Members also share their strategic guidance in developing the sustainable finance deliverables. There was a broad agreement that the high-level framework for transition finance shall and to ensure that it can support the financial market to facilitate climate transition. The meeting also noted member consideration in improving the credibility of financial institution commitment. Members also pointed toward the need to support for small and medium-sized enterprises, SMEs. Finally, members look forward to continuing the dialogue and much more progress in the third G20 finance minister and central bank governors meeting that will be planned to be held in Bali on 15 to 16 July of 2022. Thus, the main progress, and we are to be proud holding the second finance minister and central governors meeting held in Washington DC with a close cooperation with the IMF, and we are making a good progress under Indonesian priority agenda. Thank you.
Thank you very much, Governor. Very insightful brief. So before continuing to the discussion session, let's hear from our next speaker, Gita. Gita, continuing the topic, would you mind also sharing with us the global economic outlook, including its impact from the twin crisis from the current heightened geopolitical tension and also the pandemic crisis? Also, what are probably the policy implications for emerging market, including managing the capital flows amid the abundant global liquidity post the pandemic era? And lastly, grateful you could also share with us the role of global cooperation to address those challenges, including from the G20. Gita, you have 15 minutes. The stage is yours.
Thank you so much, Mr. Mukhtar, and I guess good morning to everybody there. It's a real pleasure to join this conversation, and thank you, Governor Perry, for your leadership of the G20 during this critical period. In terms of current developments, we're facing the situation where the Russian invasion of Ukraine is a crisis that comes on top of the pandemic crisis, which is something that countries have yet to recover from. So we have a crisis on top of a crisis. And global growth has now been revised down in our latest forecast to 3.6% for this year. Previously, we had it at 4.4%, so it's a 0.8 percentage point downgrade. And we've also downgraded growth for next year. While we've reduced our growth projections for the world as a whole, we have raised our inflation projections quite significantly. For this year, inflation is projected at 5.7% in advanced economies and 8.7% in emerging market and developing economies. These are significantly higher relative to our previous projections. So let me first describe the outlook and the forces shaping the outlook, and then I will discuss the risks and then go into the policy priorities. In terms of the outlook, there are several forces shaping the outlook. One of the biggest ones is Russia's invasion of Ukraine and the subsequent sanctions that have led to sharp disruptions. We have countries that neighbor Russia and Ukraine that have very close direct links with these countries being hit very hard. And several of them are also being exposed to a large number of refugees. Now, the key channels through which this war is spilling over to the rest of the world, I would say first and foremost, is through global commodity markets. The rise in energy and food prices is now adding to inflationary pressures at a time when inflationary pressures are already quite high in many countries around the world. For instance, if you look at the prices of some key metals and grains, they're at the highest levels in more than a decade. And then some parts of the world, like the Caucasus in Central Asia, Turkey in Africa, rely quite heavily for their food on exports from Russia and Ukraine. And so the longer this conflict persists, the higher the risk of having food insecurity in these regions. So I would say one of the biggest spillovers from this war are through the global commodity markets. And of course, energy prices have gone up, both oil and natural gas. And because Europe relies, some countries in Europe, like Germany and Italy, rely quite heavily on natural gas exports from Russia, we have significant downgrades for instance, the euro area. Then there are, of course, other countries in Eastern Europe, around these countries that rely heavily on trade with Russia and Ukraine that are getting affected. There are financial market volatility that has increased. But I would say that while at the onset of the war, you had financial market volatility go up quite a bit, it has come down since then. So I would say this particular channel is still relatively well behaved in the sense that we aren't seeing very large amounts of financial distress. And of course, there is a huge humanitarian aspect to this war. This is, in fact, the fastest growing refugee crisis since World War II. Counting refugees and those who have moved within the country, over 11 million people are displaced. So that's one big bucket which is coming from the war. The second, another big area that is slowing down growth in the world is the growth slowdown in China. In China, a surge in COVID-19 infections and mobility restrictions are weighing on growth in the midst of a broader slowdown that's coming from slower recovery in consumption and ongoing crisis in the real estate sector. And of course, not to forget that the pandemic is still not over, and we're seeing it in many other parts of the world, including China. In terms of on the policy front, even before the invasion of Ukraine, inflation had risen significantly in many countries, and many central banks have started to tighten monetary policy. Policy rates are expected to go up even further. This obviously poses a risk to emerging and developing economies. In the event of monetary tightening that is really rapid in advanced economies, this could cause borrowing costs to go up for emerging and developing economies and the risk of capital outflows. On the fiscal side, fiscal policy was used in protecting people and firms in the crisis, in the pandemic crisis, and so countries built up a large amount of debt. Debt to GDP ratios are at the highest levels on record in both advanced economies and emerging markets as a group. So the policy space that exists to tackle new and ongoing challenges has become much, much smaller. So we're in this environment where we are hit with crisis on top of a crisis, where central banks, especially in many emerging markets, but also now in the major economies, advanced economies, are now in the tightening cycle. They're raising rates, and fiscal space is quite narrow. So you can see how the risks in this environment can be quite severe on the downside. Financial stability risks rising. The war is really testing the resilience of the financial system. Like risk capital outflows from emerging markets as advanced economies, central banks tighten to fight inflation. Food insecurity is also a great concern. As food and energy prices continue to rise, inflation, we could have social unrest in many countries. So these are big risks. And since the pandemic is not over, another risk is you could see a new variant that comes up that creates much more distress than what we have right now. And of course, there are the longer term challenges that we have to deal with. One is to do with the fact that the pandemic has led to what we call scarring in many emerging and developing economies, and that's much more than in advanced economies, which is basically that if you look at their projected GDP level, say in 2025, relative to where they would have been in the absence of the pandemic, pre-pandemic, that there is a big gap over there. So there is an important hit to GDP and to income in these countries. And there are many factors behind it, including the hit to learning because of schools being shut down and remote learning not really working very well. Labor markets are tight in advanced economies, while employment in emerging markets has not yet recovered to its pre-pandemic levels, and while at the same time informal work has risen. So we are seeing large emerging markets where informality rates are now higher than pre-pandemic levels. And like I said, there's unprecedented disruptions to schooling that could diminish human capital for decades to come. Moving on to the policies, on the policy front, the immediate priority is to end the war in Ukraine. That would be the way we would at least take one crisis off the table. So end the war in Ukraine, focus on ending the pandemic durably, fight inflation, and address debt. So domestic policy responses are required to deal with very difficult trade-offs in many countries, because on the one hand, you're fighting inflation, and you have to bring it down, but at the same time, you need to be able to preserve the recovery, build resilience, and improve medium-term prospects. On monetary policy, our view is the central bank should act decisively in places where inflation is well above target, and they should do that to return inflation to target, and thus, preserve medium-term growth prospects. At the same time, they should, of course, be data dependent and also communicate very effectively, because it's important, especially for major central banks, that they do not generate large spillovers and large tantrums in financial markets. On the fiscal policy front, as I said, most countries do not have much fiscal space. And so, but at the same time, given what we're seeing in terms of rising food prices and energy prices, we see a case for very, very targeted and temporary support to the most vulnerable in the population. So governments should certainly prioritize food security. They should address inequality through taxes and spending policies. Where feasible, they should continue to take out pandemic era support, and they should minimize learning losses from school closures. Now, there are countries that have high levels of debt. It will help them in these times when real interest rates are expected to rise to have very credible medium-term frameworks, because that will help them also in terms of lowering their borrowing cost. Financial sector policies also will need to be undertaken. You have, especially as monetary support is withdrawn, you need to make sure that there are adequate disclosures and standards, accurate asset classifications, and loan loss provisions. And to reduce the rollover risks, which can happen, for instance, when interest rates start going up in the advanced economies, it is important to reduce currency mismatch and allow countercyclical activation of macroprudential buffers. It's also important to regulate private crypto and include cyber risks in financial stability analysis. And of course, it's important to invest in a resilient, green, and digital future, while addressing inequality. Countries should promote the greener economy and invest in renewables, electricity networks, energy efficiency. This will also help bolster energy security, raise GDP, and create new green jobs. Carbon pricing, we believe, should be at the core of any global mitigation strategy. But of course, there's also the need for investment in renewable technologies, infrastructure, and also just transition, which is to make sure that some of the revenues that you raise, you provide as transfers to the most vulnerable in the population to protect them from costs that may go up in the transition. Countries should also, of course, harness the potential of digital money, including through carefully designed CBDCs. And we need multilateralism more than ever. The immediate areas of cooperation should be, firstly, to lessen the humanitarian effects of the war. This is through helping refugees, to dealing with food security problems. Secondly, it's important to ensure equitable access to the COVID toolkit, including $15 billion of funding this year, so that it's not just about vaccines, but it's vaccines, testing, diagnostic surveillance. Three, preserve the climate objectives, the climate objectives. Having a carbon pricing floor, for instance, is an important part of that. Green investment, fair transition adaptation. And another big important area is on sovereign debt resolution. There will be countries, and there are countries already for whom their debt is very large and it would need to be restructured. The common framework provides the promise of being able to do the restructuring while ensuring fairness of treatment across all creditors. But that framework has yet to deliver, so much more work is needed. And lastly, on the international front, we need cooperation on taxation and financing for development. We're very fortunate that IMF members have taken very important steps forward. Last summer, we allocated $650 billion in SDRs. And just last week, we approved the Resilience and Sustainability Trust, which is an important step forward, as it's expected to provide long-term financing for climate and pandemic resilience. And the fund stands ready to help all of its members. In advance of the spring meetings, the fund revised our institutional view on capital flows to expand the flexibility to use capital flow measures for capital inflows in cases where vulnerabilities exist. We know that capital flows have several benefits, but at the same time, they can lead to some serious macroeconomic challenges and financial stability risks. The point of this update to our institutional view on capital flows was to provide more tools to deal with this kind of, to prevent this kind of volatility. So we certainly see an argument that in some circumstances, countries should have the option of preemptively curbing debt inflows to safeguard macroeconomic and financial stability. Now, while all of these issues have been actively discussed among the membership during the spring meetings, it remains clear that the G20 serves as an important forum for global cooperation. That's provided key support for SDR channeling and the RST. Indonesia has displayed tremendous leadership, including through the work of the G20 Joint Finance Health Task Force. And now we need to urgently resolve implementation challenges regarding the common framework for debt treatment. Overall, it is clear that we are at a watershed moment for multilateralism and international cooperation, which calls for the preservation of the rules-based framework that has governed and benefited the global economy for 75 years. Thank you so much.
Gita, the presentation cover all the issues from the how the fund see the challenge going forward and also how they respond to the delicate issues. Now let's continue to the last session, which is the Q&A. In the interest of time, we already selected 2 participants that would like to ask questions to the speakers. I believe many participants will have many queries and in this regard, but by having those two participants, hopefully they can represent all the curiosity. So the first participant that would like convey their question is Ms. Amalia Widyasanti. She is Deputy for Economic Affairs, Ministry of National Development Planning. And then the second one is Professor Hermanto Siregar from IPB University and also Rector of Perbanas Institute. Grateful if both of you could convey very brief question to the speakers. Please let us know to whom your question will be referred to. To be more efficient, I would like to gather all the questions first time before being answered by the 2 speakers. Now, let me give the floor to the first participant, Ms. Amalia.
Thank you, Pak Firman. Thank you very much, Excellency Bapak Periwarjo and Ms. Gita Gopinak for your insightful presentation. I have 2 questions here. The first one is regarding the impact of the Russia and Ukraine war through the commodity price channel. How long do you think the high energy prices will stay Will there be a new equilibrium in the energy market, and what will be the implication to the medium-term green objective? And my second question is, given the fact raising risk of global economy that you mentioned before, Ms. Gita, countries now tend to have a more inward-looking policies. How do you think that G20 will mitigate this issue? Thank you very much.
Thank you, Ms. Amalia, for a thoughtful and also a very provoking question. Let's move to the second participant, Professor Hermanto Siregar. The floor is yours. Professor Hermanto, can you hear us?
Yes, thank you very much, Bapak Periwarjo. What is the implications of the current global economic situations on Indonesia macroeconomy, and how could G20 best deliver its goals, recover together and recover stronger to its members and to the rest of the world? And for Gita, regarding the impact of the, you mentioned about cooperation on international taxation. Could you elaborate more on that? Thank you.
Oh, so thank you so much, Ms. Amalia and Mr. Hermanto, Professor Hermanto. We already had 4 questions. Those, if I could read from the question, it should be 2 for Gita and 2 for Governor Perry. The first question will be related to the impact of war, including the commodity price and the impact for the long term for the green economy, and also how is the impact to the strategy of policy framework regarding the inward looking, and then the implication for the G20 going forward. And also from Professor Hermanto, a question will be related to the implication to Indonesia and also the role of G20 to address the issue. And then the second question will be related to the taxation. I give the floor the first time to Governor Perry to answer the question from Amalia and Professor Hermanto. Governor.
Thank you, Ibu Amalia and Pak Hermanto Siregar for the excellent question. This is actually the discussion under the G20 as well as under the IMFC. I think Ms. Gita will share about the IMFC. I will share how the G20 discussed this issue and what the policy was being formulated, and also share among others, and how this also impacted to Indonesia. First, on the impact of the war between Russia and Ukraine, of course, there are 3 channels of the impact, as we already know. First, of course, the impact to the trade channel. The trade channel, which is also the impact of the war, of course, making the problem of disruption of the global supply chain, as well as the slowing of global economic growth. As we already know, IMF already revised down the global economic growth to 3.6% this year. The second impact is, of course, high commodity prices, especially the energy prices and food prices, which is also directly impact for all countries. Inflation, not only advanced countries, but emerging countries and developing countries. This is a much more serious problem, especially for emerging countries and developing countries. Most of us just want to recover, and there's a limited fiscal space. And also, some of the developing countries have that problem. This is becoming a serious problem on how to recover in emerging countries, developing countries, as well as in developed countries. The third channel is, of course, financial channel. The impact of this war with the implication of many central banks need to raise interest rate to address the inflation and also the global liquidity tightening. This three impact being discussed under G20. Second, how G20 address this issue? Of course, there is a solution for the short term and as well as for the longer term. For the short term solution, of course, how to address the impact of the inflation in a number of countries. Yes, many central banks need to address to avoid this inflation pressure from increasing interest rate and or balance sheet tightening. The discussion under the G20 this reiterated back our commitment in February meeting in Jakarta. The members country committed to well-calibrated, well-communicated, well-planned normalization process. By doing that, then many countries, especially emerging countries, well prepared to mitigate this. From the emerging and developing countries, there is also a commitment to strengthen the sound macroeconomic, both fiscal and monetary policy. This is where the IMF can help emerging and developing countries to enhance integrated policy framework, capital flows management, working closely with BIS, macro financial policy framework. I think those the discussion under the IMF. And of course, there is a role of the IMF Gita can share with us to strengthen the global financial safety net under the IMF. Those the discussion under G20. Yes, members committed to recover together, recover stronger, to address the short-term problem, but also back to the longer problem. The longer problem already on the agenda, how to do the structural reform, to address the scarring effect of the pandemic, how to address the health problem, how to address digital payment system, central bank digital currency, sustainable finance, green economy, as well as inclusion. Those agenda still ongoing and on top of additional problem to address the impact of the war in Ukraine. Number three, what is the impact of Indonesia? Indonesia, I think we are fortunate because the direct impact of this war are limited. The indirect impact from the trade channel, of course, with the declining of global economic growth, then of course our real export contribution to GDP will be lower. That's why recently the Bangladesh revised down our forecast to 4.5 to 4.3% from previous forecast 4.7 to 5.5%. The impact on the commodity prices, of course, depending on how the fiscal policy will be. Remember, the impact is more on the energy price and food prices. And the government, of course, will not pass on all of those high commodity price to the consumer. Some of the fuel price, for example, of course, premium and diesel still subsidized. Electricity still subsidized. And the high commodity price also increase the revenue of the fiscal from this increasing commodity price. So this is the policy that I do understand. Minister Sri Mulyani still calibrating what is the correct response. Some of them, of course, will be passed on the inflation, but many of them will be also absorbed by fiscal. From monetary policy, we always ready to answer our exchange rate stability, to answer our inflation well anchored, to answer growth going continue. Our exchange rate continue to be market-based, market mechanism, and thank goodness our current account deficit is very small, supporting the positively our exchange rate, while we can direct to address domestic inflation and growth forecast by normalization of our liquidity first, and later on, if there is fundamental pressure, inflation rises beyond our targeted, of course, we do not hesitate. Later on, we can calibrate the response through interest rate. This is the sequencing of our monetary policy, which is starting from exchange rate stability, liquidity normalization, and then following up by interest rate response. In due course, of course, we will communicate to publicly, to the market and the economists, how best we respond. But last but not least, Indonesia are fortunate on our strong economic prospect. This year, our economic recovery continue. Price stability continue stable. Exchange rate stability continue. And also financial system stability. Reform continue in Indonesia to serve more prospective medium-term outlook of Indonesia. This is the spirit of recover together, recover stronger, which is Indonesia also pioneering on this issue and also sharing among the G20 members. Thank you very much. Those my question to my answer to the two questions. Thank you, Pak Firman.
Thank you, Governor. That's a very comprehensive answer. It's not only related to how we see the impact to the national economy, but also how we see the interaction among the policy will be taken in the policymakers, and also how is the role of the G20 to address all those challenges. And next, Gita, would hope you would like to also answer those questions from those two participants. Gita.
Yes, happy to. So on the question of commodity prices, we use what the futures prices tell us in terms of commodity prices. So according to the futures market prices, commodity prices should come down between this year and next year. On average, it should be lower. That's the projected part for commodity prices. To your question of, what are energy markets going to look like and the implications for the green transition. So I would make just a couple of points, which is, first, what we are seeing, of course, is that right now, as energy costs have gone up and countries are looking for substitutes and cheaper sources of energy, we do see some backsliding happening in relative to the energy transition in terms of moving, some countries moving back to coal to generate their power. So you certainly have some temporary backsliding, but what you are also hearing of, especially that's coming out of Europe, is that this shock has actually accelerated the determination to move much more quickly towards relying on renewables and making the transition happen quickly. So I would say that while in the short term it maybe makes it worse in terms of the green transition, but in terms of the medium term to the long term, I think this is actually going to push the world on a more greener path, at least in some places. For sure, energy trade is going to look very different very soon. I mean, already is. Europe is moving away from sourcing from Russia. They've said they will do that over the next 12 months. So where you buy your power from is going to change. And also, as countries, rely more on renewables and solar and wind farms and so on at home, that would also change the demand for fossil fuels and also demand for exports from other countries. So I think that's something to keep in mind. Countries and their inward-looking policies, I would say that one of the big issues that came up in the spring meetings was indeed the fact that after the pandemic and now the war, countries are rethinking how to trade with the rest of the world. On one hand, we know that trade provides immense benefits It has played a very important role in bringing down poverty around the world, raising prosperity, increasing productivity, keeping inflationary pressures low. But on the other hand, countries are worried about supply chain breakdowns, hostile trading partners. And so I think there is a real serious rethinking about how to trade with other countries. And this has come up quite a bit at the spring meetings, and I think will be an issue going forward. Of course, at the IMF, we will continue to use our analytical work to emphasize how valuable global trade is. And yes, we are living in a shock-prone world. No two shocks are necessarily going to be the same. So you really want to build resilience in your supply chains. And the way to build resilience actually requires relying more on global trade and sourcing your inputs from multiple countries. So that's one of the points that we will make, but this is going to be an issue going forward. On the international tax question, I was referring to the agreement that was signed by 130 plus countries agreed to on to taxing corporate profits, which is the first pillar, one pillar which is about taxing extraordinary profits based on where you sell your goods or where your customers are, as opposed to where your employees are. And the second, to have a global minimum tax of 15%. So countries have agreed to this, but now what you need is implementation. And that's what we are pushing countries to do. I'll stop with that.
Thank you, Gita. Very clear answer from you, which is touching not only for the short-term issue, but also long-term issue. With that, I think I would like to say thanks once again to all speakers, Governor Perry, and all you, Gita, for the time. I believe we have seen that the role of G20 is taking under Indonesia presidency, as well as the current global economic outlook and its policy implication. Really appreciate once again Governor Perry and FDMD Gita for the participating in this event and sharing a thoughtful update on the G20 and global economic outlook. Thank you also for all participants for joining today. But before ending the session, I would like to ask Governor Perry to convey a short closing remark for the session. Governor.
Well, let me thank you first to Gita. Thank you for your support of G20 and also MD Kristalina, which is this is a make a difference of the G20 and the Indonesia Presidency. The world is living from one crisis to another crisis, Asia crisis, global financial crisis, and then COVID crisis. Now, as Gita mentioned, crisis on top of crisis. But in September 26 of 1999, G20 was formulated as a consensus base of 20 members countries, becoming a premier of multilateralism to solve the global problem, to solve the global crisis, to be better living for global economic recovery, to serve the needs of global and people around the world. This is the spirit that Indonesia coming through as a presidency of G20 in this 2022. Yes, there is challenges. After the pandemic, we have to recover together, recover stronger. Now, on top of this, we have a crisis also of war in Ukraine. But the spirit of multilateralism under the G20, this is that we want to bring about to solve the problem as together, to strengthen the power of we, of Indonesia to the global, to better living, to recover together, recover stronger. With that, Peri Warjo, Governor of Central Bank, from Washington, D.C., together with Ms. Gita Gopinath. Thank you very much for our audience in Jakarta. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Thank you very much,
Governor
Governor.
Perry,
And,
Ms. Gita, and Mr. Firman, we would like humbly ask for quick your time. We will have a virtual photo session, Pak. We will take 2 shots of photo. I will give the countdown. All right, everyone's ready? In 3, 2, 1. Once again, 3, 2, 1. All right, thank you very much, Governor, Ms. Gita, and Mr. Firman.
thank you, participant. Thank you, Governor.
All right, ladies and gentlemen, our honorable guest here in Fairmont, Jakarta and Washington, D.C. Though Indonesia's economic recovery accelerates in 2021 and it is predicted to improve again in 2022, Indonesia still faces challenges in returning to its pre-pandemic economic growth. Hence, this session will bring out a deep conversation about those predicted challenges along with our approach to overcome it. On such note, the second session will discuss the global economic recovery and its implication on Indonesia. It will be moderated by senior Indonesian journalist of Metro TV Jakarta. Ladies and gentlemen, without further ado, let's give us a warm welcome to Ms. Kania Sutisna Winata.
Thank you, Nadira, for that warm introduction. Hello, a very good morning to all of us, ladies and gentlemen, participant of this G20 Finance Trackside Events high-level discussion. Welcome to the second session, where we are going to discuss ways on strengthening economic recovery amidst heightened uncertainty. That is our topic, as we are still grappling the onset of a pandemic that has been happening for the last 2 years. We want to take, of course, a closer look on how Indonesia is doing right now. My name is Kania Sutisna Winata, and it is a pleasure for me to be here to lead the discussion for the next 1.5 hours. So if you allow me, I would like to take a seat right now as I introduce further the topic of discussion that we are going to have in the next 1.5 hours. As was also mentioned earlier, that Indonesia's economic recovery accelerated in 2021, and it is predicted to improve some more this year in 2022. But however, despite the recovery that we are seeing, Indonesia is still facing a lot of challenges, as was also highlighted perhaps in the first session. Uncertainties caused by rising geopolitical tensions, inflationary pressure caused by commodity and energy hikes. If we want, of course, to achieve and also regain a pre-pandemic growth level. So these are some of the questions, some of the issues that we are going to discuss with our distinguished speakers that I'd like to invite. So the issues are, what are the macroeconomic risks that are foreshadowing Indonesia's economic recovery, particularly this year? Which one should we pay attention to? And how can Indonesia counter those risks? What kind of a mitigation strategy can be adopted by Indonesia to provide cushions for a stable and also long-lasting recovery? And last but not least, maybe in the longer term, this is how Indonesia should address as well, is how to counter and address the scarring effect of the pandemic, mainly of lower productivity, among others. What kind of structural reforms are needed and suitable for rejuvenating productivity. So to discuss more on these issues, we have joining us two prominent speakers who are present with us, among us this morning. First, I'd like to introduce our first speaker and invite her to please join me on stage. It is my honor to invite Senior Deputy Governor of Bank Indonesia, Ibu Destri Damayanti. Please welcome. Good morning. A quick hello. Pleasure to have you with us this morning.
Hello, good morning, Kania. Nice to see you again.
It's a pleasure to have you with us. I hope you're keeping yourself healthy.
Hello.
Just a very quick background, ladies and gentlemen, not that she needs any introduction, but perhaps just a quick reminder that Ibu Desri was appointed as Senior Deputy Governor of Bank Indonesia starting in July 2019, and prior to her assignment as Senior Deputy Governor of Bank Indonesia, she had held various strategic positions, including member of the Board of Commissioners of the Deposit Insurance Corporation, or LPS, for the 2015-2019 period. And she holds a bachelor degree in economics from the University of Indonesia and a Master of Science from Cornell University, New York, USA. And now moving on to our second speaker, who is also joining us here this morning, is the head of macroeconomic and financial sector policies at Prospera, Mr. Anton Gunawan. Please welcome. Hello, good morning. Thank you again for joining us, sir. Such a pleasure to have you with us. And just a quick background on Mr. Anton Gunawan, who's also very well known and probably doesn't need an introduction. But just a quick background on what he's doing right now. He's currently serving as head of macroeconomic and financial sector policies at Prospera since May 2019. And in his current position, he's also helping advise several ministries and regulators. And Mr. Anton holds a Master of Philosophy degree in economics from Columbia University in the US, a Master of Arts degree in economics from the University of Chicago, US, and a Sarjana Ekonomi degree from the University of Indonesia. So again, welcome to our panel. So we were supposed to have a third panel, but on behalf of Mr. Arshad Rashid, I would like to apologize that he will not be joining us in this panel. So let us start our discussion for today, as was also highlighted during the first session that was just concluded. We'd like for each of our speakers to give a brief presentation of about 15 minutes, which then will be followed by a Q&A session, which we are going to pre-select participants to ask questions to you, Ibu Desri and also Pak Anton. But starting with Senior Deputy Governor Ibu Desri Damayanti, thank you again for joining us this morning. As we are seeing right now, the central bank has been keeping a set of policy mix strategy that has been optimized to support a stable recovery of Indonesia's economic growth, as we are also seeing flattening of COVID-19 cases in the country. And this could perhaps solidify growth projections for this year and also for the coming year. But we are seeing rising geopolitical tensions that could perhaps pose a risk to the growth projections so far. So what is the central bank view on this? What are the macroeconomic risks in this year that could foreshadow Indonesia's economic growth? And what do you as a policymaker, how would you as a policymaker communicate a policy framework that would provide a forward guidance to the market, to economic agents? The floor is yours, Ibu Desri.
Okay, thank you, Kania. Very good morning to all of you, distinguished ladies and gentlemen, and thank you also for coming to the very important and interesting event. It's a part of the G20 event, Indonesian Presidency. And Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera for all of us. Salam, Om Swastiastu, Namo Buddhaya, salam kebajikan. Ladies and gentlemen, I think in the morning we already heard a very interesting discussion from our governor, Pak Peri, and also from Miss Gita from the IMF. And they are ensure that the situation in 2022 is not a very easy situation. Based on the discussion, I think in the last 1 week in the US, in DC with the IMF and also some global leaders. And the top of the top, I think, as Ms. Gita mentioned, or on top of the crisis that we have so far, actually is coming from the Russian and Ukraine conflict, which is right now is become prolonged, and we even don't know what is the bottom of that crisis. And what happened in the Russian and Ukraine conflict, I think this is once we already have to solve a big problem in the pandemic COVID. Right now we have a very severe crisis in Russian Ukraine that resulted in high global commodity prices and then also worsening disruption in world trade chains and increased uncertainty in global financial market. And also one of the challenges that we are facing right now actually is coming from is quite aggressive normalization policy taken by the Fed and also some other central bank in advanced economy. And those actually as a response of the inflationary pressures coming from domestic pent-up demand and also coming from the hike in the commodity price and food prices because of the Russian-Ukraine conflict. And Ms. Gita already mentioned this morning that IMF finally has reduced their prospect of economic growth globally from earlier 4.4% to become 3.6%, while the global commodity prices, including energy and food prices, are predicted to be higher, and this also could trigger inflationary pressure globally. And moreover, increased uncertainty on global financial market will result in more limited capital flows to emerging market countries, along with the increase in the risk of capital reversal to safe haven assets that potentially give more pressure to the exchange rate of developing countries, including Indonesia. However, we are very fortunate, as mentioned by Pak Peri earlier, that if we look at the direct impact of Russian-Ukraine conflict to Indonesia, actually is limited. Even in some extent, Indonesia gets some benefit from this conflict because of the high commodity price, and Indonesia actually still considered as a commodity-based country. So that's why what happened, domestic demand also growing very fast in Indonesia. And we can see that recovery across the board on the expenditure side and also on the production side, and even at the regional level is happening. Especially we can see starting from 2021, in the mid 2021 and until early 2022, we still see some recovery in our economy, thanks to our strong domestic economy and also supporting by our good export performance because of the high commodity price. And also if we look at some number of early economic indicators in March 2022, such as retail sales, consumer expectation, and manufacturing PMI, confirm the ongoing domestic economic recovery. Therefore, in Bank Indonesia, we expect that the economy in 2022 to grow at around 4.5 to 5.3%, higher than that in 2021 at 3.6%, and even minus 2.7% in 2019. However, if Russian-Ukraine conflict is prolonged, I think we have also to be very considered, especially also with the normalization in the US. That of course gives some complex challenge for our economy, especially for us as a regulators and as a macroeconomic policy makers. Because of course Bank Indonesia as a monetary authority, we aim to stability Indonesian economic from the impact of external pressures. But on the other hand, economic recovery, Bank Indonesia also has to ensure the economic recovery post-COVID-19 pandemic. So that's why we have to balance between maintaining the stability, because at the end, the impact of high commodity prices, food prices coming from Russian-Ukraine conflict, this will come into materialize on the inflation domestically. But on the other hand, we have to support the economic growth because the momentum right now is still there. And also from the fiscal side, if we look at the fiscal side, the Ministry of Finance, Ibu Sri Mulyani keep telling us that the fiscal function is as a shock absorber. But on the other hand, there have to be some consolidation on the fiscal side because by later on, next year, the deficit of fiscal must be come back to the 3% level. So that's why this is kind of dilemmatic that facing by us as the regulators, even in Bank Indonesia, also in Ministry of Finance. So how we have to resolve this? The first, actually, we have to strengthen our coordination between Ministry of Finance with BI and also doing some structural reform. This is a must be done by us. And also we are implementing well-calibrated, well-planned, and well-communicated measures. Distinguished ladies and gentlemen, of course, as I mentioned earlier, that close coordination and policy mix between fiscal policy, monetary policy, and also real sector policy, I think we have to hand in hand and go together. And in BI itself, in BI we will optimize the use of policy mix to face these challenges. As Pak Peri also mentioned this morning, what we are focusing, the first actually we want to maintain the stability of the exchange rate, the stability of the rupiah. And so far we can maintain stability in the rupiah with the depreciation relatively manageable compared to other country in the peers. And even we are looking at the rupiah is slightly strengthening in the last 1 week, despite some pressures from the global pressures. So this is our first priority, maintaining stability. But of course, we want the market mechanism on the exchange rate is working. And the second, as Pak Peri mentioned, actually is coming in the form of liquidity management. Liquidity management, liquidity normalization, because as a pandemic COVID situation in 2019 and 2022 and 2021, Bank Indonesia and also the governments has a very loose policy, monetary policy and fiscal policy. And what happened right now with the normalization, we are starting to normalize also the liquidity. And then interest rate, I think interest rate is the last policy that we will take. If the situation, for example, if inflation is continue high, then of course the government, the Bank Indonesia will step in and then using the interest rate as the final policy. So what we are going to do right now actually, we have series of policies. We will mix this policy. So we call it as a BI policy mix. We have monetary policy, and monetary policy is focusing toward stability. So the monetary policy is focusing on the stability in the economy, while macroprudential policy is focusing on to support the economic recovery. And what we do right now under the monetary policy, we are still keep our interest rate at the current level at 3.5% for BI 7 days reverse repo, but we are trying to manage the liquidity by increasing reserve requirement ratio by 300 basis points starting in March and then June and then September. And if necessarily, if we are looking at the liquidity still ample and also inflation start to picking up, we may use further increase on the reserve requirement ratio itself. But we want to optimize the use of reserve requirement ratio to manage the stability and also to manage the liquidity in the system. However, we will ensure that the rising of the reserve requirement ratio will not give pressure or pressure for the especially for the banking sector, because as we all know that right now banking sector still have a very ample liquidity. So that's why we will ensure that the increase in the reserve requirement ratio will still give more room for bank to lending and also to participate in the buying in the government bonds. On the other hand, as I mentioned earlier, macroprudential policy is giving to support the economy. And what we give actually is for the reserve requirement ratio itself, we are giving an incentive as much as 100 basis point to enhance for the banks who give credit for the priority sector and also for economic inclusion. And it may increase further if necessary, especially to support some priority sector growth. So that's why we are combining for the reserve requirement ratio, liquidity management. We are trying to normalize the liquidity, but in the same time, by using reserve requirement ratio, we also will give incentive for banks to increase their credit and also to support some sector, some priority sector growth. And also maybe I want to highlight some accommodative macroprudential ratio that we are giving right now actually is related with the policy of RPIM. This one is macroprudential inclusive financing ratio that aim to support inclusive financial economy, especially for MSMEs. And also for the macroprudential policy, will also be equipped with policy innovation to support sustainable finance in achieving zero carbon economic target. And other than macroprudential policy, we also have for the payment policy. So payment policy is also the policy is directed to support the economic activity and also including to achieve the inclusion growth for the people. So that's why we are issuing QR Indonesian standard, and even we continue to expand the use of KRIS, and we are expanding our fast payment BI Fast and intensifying the electronification program through social aid program digitalization and electrification of local government services and integration of different transportation mode. And especially for KRIS, because we look at so far, I think it's almost 2 years, the operational of KRIS, QR Indonesian Standard. We look at a very impressive achievement and also the performance itself. That's why we decided to increase the limit of transaction KRIS from the beginning 5 million to become 10 million per transaction in March, and further increase to 20 million effective in June 2022. Because we look at the response of the public is very interesting and very positive on KRIS. So that's why we are trying to expand not only on the nominal side but also in terms of the expansion in the cross-border KRIS with other countries, especially with Malaysia. And I think that's Kanya. And last thing, maybe we just have, I think early this week, we have a board meeting and we decided again to keep BI 7 days reverse repo at 3.5% and deposit and lending facilities are fixed at 2.75% and 4.25%. Bank Indonesia has also continued to optimizing its policy mix strategy to maintain stability and support the economic recovery by using some policy measures like strengthening exchange rate policy, maintaining an accommodative macroprudential policy, and then maintaining prime lending rate transparency, and then also ensuring adequate availability of currency fit for circulation, especially during the holiday season of the Ramadan and Idul Fitri, and also raising the maximum deposit limit for registered electronic money from 10 million to 20 million, and the monthly transaction limit from 20 million to become 40 million effective in July, and strengthening international policy by expanding cooperation with other central banks, especially in the form of local currency settlement that to support trade and investment between Indonesia and our partner investment and also for trade. So I think that what we are doing so far. And last but not least, the more important actually is how we are strengthening our policy coordination with the government and also with our other institutions, because what we are facing right now, the complex of the issues is very high, so we cannot manage and handle this by ourselves. So we have to be together. We have recovered together and we are recover stronger. Maybe I complete this my presentation. Thank you.
Very well. Thank you very much for that very clear and concise presentation, Ibu Destri. As was the highlight was perhaps is a review about what Ibu Destri's presentation was about. Just to highlight again that the fortunate situation that Indonesia is facing, as was mentioned and was also explained by Ibu Destri, that Indonesia consumption is still very strong. The impact of geopolitical tension right now is still very limited. Ibu Destri also mentioned how export performance is still positive. These are some of the things that have supported economic recovery for this year. Ibu Destri also mentioned that Indonesia is set to grow higher than last year, of about 4.3 to 4.5%. And Ibu Destri also mentioned the policy stages that the central bank is focusing on to address some of the issues that would perhaps derail economic recovery in Indonesia this year, including also some of the developments in macro-prudential policies, such as the progress of digitalization in payment system that was also mentioned by Ibu Destri. Thank you so much for that presentation. So moving on to our second speaker who is with us this morning is also Pak Anton Gunawan, who perhaps can give us a longer term view, a brief presentation on some of the growth strategy perhaps that Indonesia can adopt in terms of how to harmonize, of course, the recovery process that Indonesia is undergoing right now, and also long-term productivity, how to address the scarring effect that has been mentioned, and what are the structural changes that can be adopted to address this, mainly to address unemployment and also disinvestment that is happening in most major economies right now, including Indonesia. So in the short term and in the longer term, how can we reverse the lower growth of potential output, and how? And maybe you can throw in the role of technology and also digitalization in improving productivity and also economic inclusion in Indonesia. What are your take on these issues? The floor is yours, Pak Anton.
Okay, thank you, Mbak Kania. Good morning, ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh. Om Swastiastu. Trying to answer, to give the presentations is more towards linking the current, just highlighting briefly on the current situation, and some of the policy mix has been discussed previously by Bu Destri. But trying to link it also for us to make to give a more solid foundation towards a more distant future, I think, for the medium term. I think I start the title, looking at this presentation as looking for a strategic investment to leverage the emerging opportunities. That's basically what the including while we are on the recovery stage, but what's the strategy along the line towards the future? Two things that we have in mind and we have seen so far, two kind of the global trends, and it can impact Indonesia as well. One is that the economic sustainability is one of the issue and becoming one more have to be included in our strategy towards the future. The second thing is the development on the, as you said before, Ms. Kania, the digitalization and the automation and what's the impact on the other thing, on the livelihood as well and the progress of the economy. But first, if we look at the Indonesian economic outlook on the outside, history just briefly, if we look back, 2018, probably 2019 as well, I think we are, globally, we have been seeing a pressure. Indonesia is also having some kind of a pressure in terms of the potential output to grow forward. Then came the pandemic. Then came, lately also there has been disruption because of the Russia-Ukraine war, and it has some impacted into the commodity prices into the picture. Now look at the Indonesian economic outlook. Although the growth is projected is relatively okay, 4% to 5% or slightly above 5% towards 2022 to 2024. But if we look at more projection towards the longer term, it looks like we are, because of those sequence of the impact, I think we are, the path of the growth is kind of about 10% lower than the baseline forecast before the situation. And unemployment is also relatively high due to two things. One is on the demand deficiency, demand side. If we look at the one which is a challenge right now has been discussed before, is rising costs of living domestically as well, not just for the global situation because of the commodity price, because of the logistic problem, increasing the inflationary pressure. And also there's a weakening demand from our trading partner as well, China and US as well. That's from the demand side. And from the supply side, this is what linked the situation in 2018, 19, and then 20, and also lately because of the impact of the Russia, is the supply impediments. This is more needing later on the structural policy. So potential growth, we think that it may be lower due to the hysteresis and the economic scarring. The scarring effect of this pandemic especially, I think, is relatively rooted there. And also one other raised into the picture is related to the increasing, what I should say, the increasing, not just NPL, I think it's just the risk on this loan at risk. I think it's still relatively high. I mean, I shouldn't say the increasing, but it's still high, but even though it's decreasing, but still relatively high. And how to exit from this extended generous treatment of loan classification. That's basically it. If we go back about the pandemic, if we look at the COVID shift, the sectors in the pandemic, based on our survey that we did, is impacting people moving out of the current place of work into the unemployment, unemployment increasing, and mostly it happened since, not just in or on the onset of the pandemic, but also because still when we ask is since the onset of the pandemic, the first of the pandemic, and has impacted the income. So household, the livelihood of the household is impacted. And reason for job loss is because of the laid off and also business being closed down. And the business sector trying to cope with this, with the reducing the spending side, the inefficiency, and the household also trying to reduce the spending. And if we look at the impact on the businesses, I think businesses, about 1 out of 10 businesses, maybe more than that, around that, businesses are not operating since August 2021. That's again based on our survey again. And that includes the medium and large, but the bigger portion is on the micro side, the 13% of micro, and about mid and large is about 7%. Again, that's one of the the impact. And if we look at the later on the corporate balance sheet, I want to emphasize this because not so many people are talking really about it more openly, because this is more micro than macro. But corporate balance sheets are damaged. About 65% of the corporates are disrupted because of this COVID, and the revenue is coming down. Revenue growth is even negative. This is the data until the third quarter of the 2020 survey. And more importantly, I think I want to emphasize here is it affected the capacity to repay the debt. Significantly increased the debt at risk as well. I think if we use the measure of the ICR below 1.5 is considered is already in danger, not to mention if it is more stringent measure of 1. That's increasing relatively fast in terms of, and also the debt at risk is also becoming bigger. Then this corporate balance sheet damage is also make more of the restructuring. Focus is more on the restructuring, and then if we look at the data from the commercial court, is more and more debt postponement, not really against the bankruptcy, but it's more on the debt postponement, or PKPU, yeah, is increasing rather rapidly. Then this is why when we talk, again, link it into the potential growth, this scarring effect is kind of a hysteresis. Then if we look at the policy mix, I mean, again, into the picture, come into the picture is the Russia-Ukraine war. That really impacted us, even though, I mean, the impact is relatively sizable, relatively big, even though the relationship, the trade, especially the trade relationship between Indonesia and Russia and Ukraine is relatively small, but the impact is relatively big. On the current account, we see the net positive impact. The gain will be, but the gain will be smaller over time as the trading partners' demand decrease. There's some threat of recession slowing down in the trading partner. The budget impact still, again, depends on how the government can balance the fuel related to the fuel price adjustment and how to cope to the pressure of inflation here. Whether also, this balancing between the impact on the Pertamina balance sheet and PLN, which is at some point, we cannot really leave it all to them because it's important there. And also compared to the budgetary subsidy, whether they want to subsidy, the government want to subsidize it. I think this is the mix, the balancing that is needed. Growth downside pick up over time. Inflation is substantial, as we mentioned before. Capital account, if there is a risk of, extreme risk of, is a must, I think, to be handled there. I think Bu Destri already mentioned that. But at the same time, we will see that the government on the Ministry of Finance and the government is there's ongoing need to social support. As we said before, the household is being under pressure there. Budget policy has an ongoing responsibility, and that can be stand in a way of reaching a fiscal deficit of 3%. Although, looks like the optimism is still there. We can reach the 3% back to the fiscal rule. This is important. Back to the fiscal rule is important because the financial and investment markets still need to see the strong commitment of the Indonesian government for prudent policy, both on the fiscal side and also on independent bank Indonesia. Not to mention, I think people's also looking at the credible exit policy, not in the banking sector, but the policy of OJK on the relaxation, the exit policy on relaxation, but also on the exit policy from the pandemic. That's one of the, and that's why the kind of a three-pronged policy package there. One is fiscal policy has to be tailored to the needs of the economy and returning to the anchor. Right now the anchor is 3%. We can discuss later on whether the anchor still need to be 3% or something. But still, fiscal anchor is important to make a credible, prudent policy and measures to ensure ongoing market confidence. And this is why the one with the growth measures needed to assist issue and recovery, but at the same time set out the basis, the foundation for the future. More on the, because we cannot wait. We cannot wait for this looking forward. Now, talking about the future, we have seen a kind of strategy, new growth strategy here. If we look at the speech of the President Jokowi in August 2020 during the National Day, the Proclamation Day, there's some laid out of how we should achieve in 25 years at least. In 2045 goals, I think. From 2022, we are seeing the situation, the average income is still about 4.9 million per month. And hopefully in 2045, we can reach about 27 million per month. And also unemployment will be lower from 7% into somewhere around 5% level. And informality, which is also important part of the economy here, is the from 60% currently, hopefully can reach about 30%. And there's the government is already setting some kind of target along the line of this from 2020 to 2045 up to 2060, including the part on the sustainability, the sustainable economy as well, on the environment, on the energy, how to get out from this fossil fuel energy, decarbonization, and also towards the energy of renewable, 100% of renewable energy. That's the layout for the future. I think in this, I think the layout, some measures, including the health measures, I think just recently we heard that about the vaccination for the cervix cancer, I think is being wajib, mandatory. That is part of the improving the health of the economy, improving the quality of the human. Now, there's no alternative. Today's growth model falls short, basically. We think that we should include and we should emphasize the quality of growth in this case, I think. Currently, Indonesia is resource-driven and relies on commodity, but it's more on the extractive commodity, which is damaging the environment for the future. And also relying on the agriculture sector. And the growth model also relies on the government and SOE that have limited financing capacity, especially post-pandemic. But later on, we think that the private sector will be having an opportunity to be more. And the government is trying to lay out some kind of the, towards, we can call it a smart economy, when it's more productivity driven, invest in Indonesia assets, and also reflect the well-being of Indonesian beyond the GDP measures. Now, designing a growth strategy, we look at the first balance sheet, Indonesia's balance sheet, what's the asset, and then what are the strategic investment, what are the opportunities, and later on is the target well-being of population, later on for the strong, sustainable, and inclusive growth. Model, we can think about the situation right now is more dependent, focusing more on the physical capital and the human capital. But later on, we have to also include two other types of capitals. One is the nature capital, the natural capital, including the stock of natural asset, and also including identifying the value of the range of ecosystem services. And social capital, it is the one that glue the community, the societies together. This is also important, I think. And if I remember one of the Bank Indonesia's research on the UMKM, on the MSME, I think is one of the approach is also looking on the social capital. These four capital are the basis or important thing. Now first, looking at the Indonesian asset, I should be more quicker there.
Anton, if you can
Yeah.
wrap things up. Yeah?
Indonesia asset is, we know it, a lot of it, and it's laid out. You can see it in the screen there, including the regional players in Indonesia, large workforce. The population is still relatively young. Dependency ratio relatively low, valuable natural resources, which is also important, second largest rainforest, and so on and forth. And emerging trend, the investment opportunities, we see the rising valuation of the natural assets, again, the ESG, the sustainability economy kind of thing, and falling renewable energy prices more and more. China and changing patterns of global trade is also becoming a more investment opportunity. Automation and digitalization, again, structural shift away from the agriculture, more mechanization, so it's not based on the labor. demographic and lifestyle, we've seen that, and of course, environmental risks, included and also the climate and the biodiversity. Now, if we both look at this asset and these emerging trends, then there are 6 strategic growth themes, which is important here. One is fostering entrepreneurship. 2 is the productive cities, urbanization, so on. Nature asset is also important, but more toward the renewable type of thing, more environment friendly. And enhancing the resilience investment in public health, and health is important because of the human capital, increasing the productivity, empowering the rural communities to give some more inclusion aspect of this, and of course renewable energy transition that the government, I think, is already trying to prepare there. Those are things, and if we look two more slides, I think what the government, if we laid out these 4 capitals in a matrix with this, with the items that the six strategies grew there, fostering entrepreneurship and so on. We try to lay out some of the government kind of policy ecosystem and investment that are needed, including the ICT, developing ICT infrastructure, which can foster the entrepreneurship, can also enhancing the resilience, empowering rural communities, and so on and so forth. So basically just trying to map out this. There are several other investment and policy which are needed by the government. And the next one is, I think, giving some kind of opportunity, looking at the opportunity, sectoral activity and economic activity on one side, and looking forward towards the several issues there in assets and also the emerging trends. Then we can lay it out in this chart. If we look at the green one, which is more kind of impactful in the area of trade, wholesale, retail trade, and so on. So that's, we can map all the link there. Private sector job creation opportunities across this range of these sectors, economic activity. In the background, there are some predictable policy ecosystem, then the government enabling investment to set out in the and some policy mix, which is related here, I think. But basically, the quality of growth are needed. So the new path of the growth is not really relying more on the extractive nature, but nature capital linked to the renewable and to the environment are important, I think. And it has to be done now, I think. I think I should stop there. Sorry for the
Very well, very well. Thank
exceeding
you.
the time there.
Thank you so much. Good timing, Pa Anton. Thank you so much. That was very comprehensive and detailed, addressing the current issues, also addressing how to achieve quality growth in the future, in the longer term, some of the pathways that Indonesia can take, and including some of new capitals, if you can say that Indonesia needs to consider in order to move forward, such as natural capital and also social capital. Some of the things that was presented by Anton. We would like to continue now with our Q&A session, as time is very tight. I'd like to invite 2 pre-selected participants to please share their views or questions, perhaps, that could be addressed to our speakers. We would like to invite Pa Andri Asmoro as the first speaker, and we also have Pa Abdurrahman. Pa Abdurrahman, is he here with us this morning? Yes, Pa Abdurrahman. Okay, so first opportunity, I would like to invite Pa Abdurrahman to perhaps share his comments, views, or maybe questions that you would like to address to our speakers for this session. The floor is yours, Pa Abdurrahman.
Okay, thank you, Bu Kania. I have a short question to Ibu Destri. So, as we know that our macro policy actually is facing the critical dilemma today. First, to address the inflationary pressure, and at the same time also to preserve the economic recovery. So, by law in 2023, the fiscal deficit has to return to below 3%. And my question is whether the government will running the contractionary policy in 2023. My question is whether Bank Indonesia will follow the same direction with the government policy, or is there any policy space to for BI to also sustain the economic recovery in the medium term? Thank you.
Very well, thank you for that, Pa Abdurrahman. Let's go on to our next participant to ask his question as well, or maybe comments, if you can make it brief.
Yeah.
Pa Andreas Moro.
Thank you, Kania. First of all, thank you, Bu Destri and Pak Anton, for a comprehensive presentation. I have two questions. The first one is regarding to the impact of war and geopolitical issues on domestic economy. How's the government's policies coordination in supporting domestic manufacturing industries from the impact of disruption, the supply side problems like value chain and rising energy and material costs? In the case of if the war is prolonged, for example, I think that's the big challenge for Indonesia. My second question will be, like Governor mentioned before, Indonesia is blessed from positive impact from rising commodity prices and stable currencies. Another opportunities that I saw is coming from the better inter-island domestic trade, actually, between the eastern part and western part of Indonesia. How's the government and Bank Indonesia's policy coordination or strategy to ensure the rising domestic trade in Indonesia? I think that's also the promising opportunity for Indonesia. Thank you, Kania.
Very well, thank you for that. I'd like to mention that Pa Abdurrahman is from the Minister of Finance, and Pa Andri Asmoro is Chief Economist at Bank Mandiri. Thank you again for these questions. So we have several questions. Maybe perhaps the first one is addressed to Ibu Destri concerning the critical dilemma of handling inflationary pressure and also preserving economic growth. Will central bank follow the government's lead on this in terms of fiscal target for this year and the following year?
Yeah, thank you, Pak Abdurrahman, for your question. I think we all understand that, yes, 2022 is different with 2021, ya Pak ya. In 2021, everybody is focusing on how to stimulate growth, because at that one, we still don't have high inflationary pressures, especially without Russian and Ukraine conflict. Yeah? Even though in some advanced economies, they already have some inflationary pressure, especially in the US. But Indonesia at that time, no. But we are starting to have more pressures because of the conflicts is prolonged. And this resulted in not only on the energy prices, but also on the food prices. So that's why I think right now in 2022, as I mentioned earlier, we have kind of dilemmas for our perspective, how we have to maintain the stability, but in the same time, we also have to support the good momentum in the domestic economy itself, as Pak Asmo mentioned. Because that's true, we are lucky, Mbak Kania, because our domestic economy actually is quite strong. As Ibu Amalia mentioned earlier, yeah, because of the situation in Russia and Ukraine, and also uncertainty is very high in the global. Right now, some countries, they are trying to look at their policy, inter-country itself. And that's also happened in Indonesia because we have a big population, we have strong also some manufacture industry because we already mapping out some industry that actually is already progressing very fast. And also Pak Anton earlier mentioned, we also have abundant natural resources and also social power actually, yeah, to push our domestic economy. So that's why for Bank Indonesia, we have to balance between the stability, as I mentioned earlier, and also the growth. And we also have some series of policy. So we have to calibrate all the policy. We mix this policy. For monetary policy, especially using interest rate, is for stability. So monetary policy is pro-stability. We are using monetary policy, reserve requirement ratio or interest rate. But for macroprudential and other policy like payment system and also for the small and business policy that also developed by Bank Indonesia, we are focusing for growth. Yeah. And what we are doing right now is for interest rate, that is the last resort, right? We are focusing on using reserve requirement ratio because Bank Indonesia look at the liquidity is very ample in the system. So that's why if there's a lot of liquidity, this will also trigger inflation to go up, right? So that's why we have to manage this liquidity. We are raising the reserve requirement ratio, which is currently 3.5%, to become 6.5% by September 2022. And by increasing 300 basis point or 3%, we are expecting that the money can be, we can absorb the money as much as around 200 trillion from the system coming to the Bank Indonesia. And of course, will not harm the ability of bank. Bank is still very ample because right now, there's Pak Yahya. Maybe Pak Yahya can mention, can also give some explanation about that. Because the alat liquid of the banks right now is still around 30%, which is normally, I mean the benchmark or the, how you call it, the minimum requirement actually is 10%. Even in the normal situation, usually it's only around 20 to 21%. But right now, they have around almost 30%. So that's by we are increasing this 300 basis point, alat liquid is still very high. It's only declined, it's around 29, still 28, 29%. So that's why we are increasing that, but will not harm the capability of every bank to lend or to buy government bonds. Yeah. Because this is crucial for the government bonds, kan? Because the demand from domestic is become very important. Because maybe we cannot expect more from the overseas demand for the short term, because of the uncertainty, high uncertainty in the global market. So that's why what we are doing actually is we are optimizing using macroprudential policy, to manage the stability and also for growth, pro-growth. So how, in what form macroprudential policy is using to support the growth? We are again playing with the reserve ratio itself. We will give 100 basis point for banks who give lend to some priority sectors, which is under we have a Komite Stabilitas Sistem Keuangan, and we already mapping around 42 sub priority sector that need to be supported by us, and we are giving up to 100 basis point reduction in reserve requirement ratio. So the money for banks who already achieve a certain growth target, which is not that high, is very, how you call it, it's not really an ambitious target because we know the situation is still very tough. So bank also lending very prudent. But right now we are seeing that lending standard index for banks now is reduction. So bank right now is already start to lend. And we look at in the March, credit growth is already 6.5%. Even some bank, the growth is already very high. Yeah, it's about 9% or something. So that's why we are giving the incentive 100 basis point for those banks who already reached the target, giving credit to the 42 sectors, and also for the UMKM also. And we may increase again another, say, 50 or 100 basis point for the banks who already give at certain, I mean, if the growth is getting higher, then we will give incentive also higher. So that's why this is the way Bank Indonesia design the policy mix itself. Yeah, not to mention about the payment system as well. Yeah, payment system, we continue to develop our payment system to make everybody make it easy if they are doing some transaction, and also with a very relatively lower cost. And I think I also want to respond Pak Asmo question, yeah, regarding the domestic itself. Yes, Pak Asmo, we are lucky because we are supported by domestic economy itself. But of course, some risk, I think the biggest risk that we are facing by Indonesia right now is inflation. Okay. So that's why we have to cope together for the inflation. Government and Bank Indonesia, we have the team is I think also with Bappenas and Menko, so-called tim pemantau inflasi keuangan pusat dan daerah, and they are very actively monitor the price, especially for volatile food. But for administered price, it really depends on the government actually. How big the government can absorb the shock, the price shock of the energy itself. And for Bank Indonesia, of course, even though the government finally makes some adjustment in the price, especially for administered price, we will see, I mean, we are not directly increase the interest rate, but we will see, because we don't want make a response in the first round effect. We will see until the second round effect, we will see whether, even though in the first round they will be high, yeah, because if price increase, but we will see in the second round if the price can be managed, then I think interest rate will be used later. Okay. And also for the industry, as Pak Asmo mentioned earlier, we'll give some incentive, Pak Asmo. So we already have some sector, we even divide, this is the resilient sector, this one is the growth driver sector, and this one is slow starter but need to be supported. Like for example, tourism. Okay. Yeah, tourism kan they are suffering a lot ya because of the COVID. But right now they start to pick up. That's why if you look at the economic growth in Bali, Nusa Tenggara, and so on, some tourism area right now they are trying to pick up because mobility is getting back. Yeah.
Thank you so much for that, Ibu Desri. Moving on to Pak Anton, maybe you can perhaps take some of the questions as well. Maybe you can answer the question of Pak Andreas Moro, taking into consideration prolonged impact of the war on manufacturing industries and how to support them, and also how to take opportunity of the rising domestic trade in Indonesia. And also maybe you can take the first question as well if you have any advice on how the government and also the central bank can move forward in addressing those issues. Pak Anton.
Yeah, I think this is one of the, I think if we look at the impact of this Russia-Ukraine war on Indonesia, it's not just, I mean, inflation is one thing, of course, yeah. But the channel is more towards this commodity because of this commodity price increase. Yeah. One thing which is also important to us for some time, I think for many years, I think we have seen that this is happening. Commodity price fluctuation has been happening almost every time up and down, and almost always is kind of, it can give some benefit, like right now for some companies, some corporates, some corporates is having huge amount of pile of cash right now. Unlike in 2010 or 2011, a commodity boom, where those companies, when they have the money for this commodity, just part on the sectoral, on the commodity related activities, companies, they use it for some some productive, but some are also unproductive investment, including if we look at the property boom at that time. But this time is a little bit different because of this uncertainty, including the Ukraine, the Russia-Ukraine. Those companies, the one which is related to commodities, having piling of cash, they are not really, they are a little bit waiting, partly, just still piling the cash there. I think, Pak Yahya probably can look at the balance sheet of those companies in the banks there. Some is still there. They are still waiting. And if they do some kind of investment not really in the kind of a property sector, because property is one of the, right now is a little bit risky right now. Now they try to stay there. Now, how can we, question is how can we transfer, how can we channel this money into a more solid, productive investment for the future? Again, if we have this program or laid out, as I mentioned before in the presentation, for the future there, then it can help them to determine, supported or facilitated by the government into that area, that one. On the inflation side, again, I think it's already discussed again before that the government has to really balance out between supporting the price with subsidy, but again, subsidy is a little bit tricky because exit policy is becoming harder when you give a subsidy for a long time, or just ad hoc policy like the BLT, to directly to some people who are really needing it, more lower income people, and some part of this business sector on the middle size there, which is also hurt because they don't get the support. I think this is the one that also need to be put attention for, I think, for the from the government side, I think, in terms of the policy to support them. And of course, transportation logistics system, because of fuel shortages, I think accessibility to this fuel is a must, I think. So that the trade, inter-island trade cannot be disrupted. And in terms of the pricing as well, again, have to really calculate how high is the increase or the adjustment of the price of fuel, such that it doesn't really hurt the budget, or at the same time it's not really hurting in terms of this inflation and economic activity. But more strategically, if we look at this, again, more and more fluctuations in the commodity prices, I think we should have a framework to handle this more comprehensively. We kind of something, some framework for the CPO, absorbing the prices when commodity is high, taking it out, putting it for some kind of funds for helping this industry, CPO industry, and at the same time like right now, I think lately, this money can also help to quote unquote kind of subsidizing temporarily the price increase in the cooking oil, for example, in this case. But can we have some kind of a framework for this commodity? How to stabilize, how to the impacts how to smooth out the impact of this commodity price fluctuations? What kind of framework that we can have? Because we don't want to see this. Indonesia is rich in the natural resources, but we looks like we are also facing some kind of a curse from this natural resources. So a framework of how to stabilize it when the good time, during the good times, and during the bad times as well. So it seems to me that we don't have that right now, and it is we still need to think about that along the line again, on the path towards the sustainable economy, toward the future there, and how to handle the situation there. We cannot rely mostly on just commodity prices. I think when I talk about the nature capital as a part of the long-term growth, is more towards the quality of nature capital. It's not just as an extractive part. I think, I hope I answered.
I guess we have to just find new ways, on how to think about our economies right now, right? In the short term, it's a very complex situation that requires a balancing act, but in the longer term, that we need to find new pathways, we need to find new ways to rethink about how we're going about our economies. If that can conclude your answers to the speakers. But at this point, I would like to invite, I think we have time for one more participant to join in as well to give his presentation, give his answers, his questions, sorry. I'm sorry, Mr. I think we have pre-selected one participant to ask their question. So we have Mr. James Walsh, which is also head of the IMF representative in Indonesia, Jakarta. If you can please perhaps share your views as well, or maybe you can address some questions to the speakers.
Thank you. Thank you. Very much. I guess it's on now. One of the questions that came up in our Deputy Managing Director's presentation were these three large global risks. First, from the war in Ukraine, and second, she talked about growth in China, and third, she talked about global inflation. And one question I would have is, how would Indonesia react, and what are the relevant concerns here that we should have about higher inflation in the developed economies and potentially higher interest rates around the world? How should we react to that?
Okay, thank you for that question. I think Bu Destri has already explained at length, but maybe you can highlight some of the policies that you will be taking addressing these three global risks that was also briefly presented in the first session.
I think Pak James, I think basically you agree with me that the most critical issue in Indonesia right now in the short term is the inflation, high inflation pressure. Even though presentation from Pak Anto is very interesting, because this is only one part. Because if we look at the longer term, then what Indonesia must be done actually is kind of structural reform and investment and so on. But right now we are focusing on the inflation side. And I agree also, I think there are three big issues in the global that need to be considered for us as a policymaker in designing our policy. First, to see, even though I think no one knows, except Mr. Putin, when the war is over, Everybody doesn't know about that. This is if going to be prolonged. I think this is very. This will give a big push for. Big hit for our economy itself, because this will affect finally our export and so on, especially China. Right now we are looking at China economic growth is also slowing down, whereas in the first quarter they grew only below 5%, only 4.8%. And China right now is the number one of our trading partner actually, and the third actually is the normalization. So of course, as I mentioned earlier, what we are doing under this situation, of course, as our mandate as a bank central, we have to stabilize the rupiah itself, in the sense that if we're talking about external, then we have to stabilize rupiah exchange rate, rupiah against US dollar or other major currencies. And internal, of course, we are talking about inflation. What BI doing right now for the rupiah stabilization, so far we can manage positively, and this is actually is really supported by market. Market mechanism works very well. As Pak Anton mentioned, corporation have a lot of liquidity, and exporters also, they have their exports still perform okay, especially for the commodity-based corporation. They have a lot of liquidity, and they sell their dollar because they still develop domestically. I think this is a good sign. And one also interesting, Pak Anton, maybe if you look at the corporate balance sheet in the banking system, right now they are moving from time deposit to giro. That indicates that they start to operate, to develop, and also this can be seen with the increasing in the working capital credit, credit growth. So I think what I am going to tell you again, for inflation, Bank Indonesia the first will trying to manage the liquidity, so liquidity normalization by raising reserve requirement ratio, and also later on if we look at how big is the impact on the inflation, because right now if you look at core inflation is relatively manageable. It increased, but we haven't seen kind of pent-up demand like what happened in developed countries last year. And yesterday we just get information in German, the inflation is already picked up 7.5% or something like that. But in Indonesia, we still look at the the relatively manageable level. And what important I think is beras, beras inflation is very low, even deflation, and because rice is staple food and its contribution in the inflation basket is very high. So that's why I think we still maintain the volatile food is relatively low. But of course, Bank Indonesia and also the governments will look more closely on the inflation, especially coming from the administered price. This is the big challenge for us actually. I hope I can answer you. Thank you.
Yes, I hope that was satisfactory to you, Mr. James Walsh. Pak Anton, would you like to add a little bit on that, or should we conclude our session? Just a brief one, just a very brief one.
One issue which is this is more of this is kind of touching upon the probably kind of questions also to the Bu Destri, with regard to this pressure, the monetary policy. Again, we know
Japri aja Pak.
Japri aja.
We know the normalization, the global normalizations, and its possible impact on the Indonesia is one on the if there's some risk of situation. Right now, I think more importantly from the global US and some other. The important thing is, I think, more kind of a clear signal, I think, to reduce the uncertainty because of this normalization. That can help us, I think, in the emerging market, including Indonesia, to really set out the monetary policy. And again, the monetary policy within the context of this inflation, relatively higher inflation later on pressure, even though it will be some kind of, I suppose it will be temporary. And I hope that, and I'm confident that Bank Indonesia can handle that.
Yeah.
Question is more towards how big if of a real interest rate that is kind of allowed or kind of being taken as a, I don't know whether it's an intermediate target or not.
Okay.
How big it is? Because looks like is so far is relatively big.
Okay.
Because this is the questions of inflation, inflation pressure, and on the other side is how to increase the interest rate.
Okay.
If it is can be reduced a little bit, then it can help
Okay.
the business as well.
That is always the million-dollar question, yeah. Bu Destri, I'm not sure, I don't know if you're allowed to answer this, but if you can just give us a...
I can answer.
Okay.
As I mentioned earlier, Pak Anton, what we are tend to say, even though including Pak Peri, it doesn't mean that we don't want to raise interest rate. That doesn't mean that. Because interest rate, of course, this is a very important policy instrument on the monetary side. But when the timing, we have to wait. We will use that at the end. If all our instrument will not enough to handle the inflation problem. And I think also, maybe Pak James, about normalization. What happened right now is yield, US yield increased very significant, right? So we have to dance together with the global. And what we see actually is our yield also is already increased right now, Pak Anton, because this also to maintain the attractiveness of our instrument, our asset, domestic asset. So in that situation, we cannot ignore the what happened in the global. We have to move together. We have to dance with the global, including with the currency itself. Yes, we have some slightly depreciation, even better than other region, but doesn't mean we are away compared to others, because we are dancing together with the global movement. Maybe that's. But lastly, maybe I want to close this with just saying that please, we have to be very optimistic with our economy, because we have a very strong, actually we have very strong domestic economy, good fundamental, very stable the currency itself, and a lot of opportunity to invest in Indonesia. And what we need right now is more optimism and spending, especially from high income people, because we still see the spending for this group still very low.
Yeah, Idul Fitri is coming up.
Yeah.
So hopefully, Idul Fitri is coming up.
Oh yeah, Idul Fitri is coming up. So we do hope our economy will be boosted. Will be boosted by the activity of the people. Yeah.
Okay, very well. Thank you for that, Ibu Destri, Pak Anton. A big round of applause for our speaker for today. In conclusion, amidst the uncertainty that we are facing right now, perhaps first initially was caused by the COVID-19 pandemic, and then rising geopolitical tension that we're still grappling on. But maybe it has also given way for us to think of other ways about the economy and moving forward, and also to regulators as well. The policy choices that we make today, of course, will determine the success of tomorrow. And I think that was also the message that Pak Anton has also conveyed. And not only in building a recovery process that is stable and sustainable, but also maybe transitioning into a more resilient one and also a more inclusive one. I think that can highlight maybe the discussion of this second session. So again, a big round of applause for our speakers, and thank you again for joining us, and also our participants. Thank you for sharing your insights, and also thank you for the discussion. Also for the participants, we're very sorry we cannot accommodate all the questions from our audience today, but we hope that the questions conveyed by the pre-selected participants can also represent some of the questions that may be in the audience mind right now. So we hope again today's discussion has been fruitful and also enlightening and can prepare us for better years to come. And stay safe, everyone. And I'll hand back the event to the MC.
All right, thank you. Thank you, Ibu Destri, Bapak Anton, and Ms. Kania. I would like to humbly ask to step forward as we will take a group photo. Ibu, Bapak. All right, I'll give the countdown, so we will take several shots of photo, 2 shots minimum. All right, in 3, 2, 1. Once again, in 3, 2, 1. Okay, thank you very much, Ibu Destri, Bapak Anton, Ibu Miss Kania. All right, ladies and gentlemen, now we have finally reached the end of our discussion today. So we thank you very much for sharing your time with us, and hopefully it was an insightful and informative session for all of you, as it was for all of us here. So on behalf of Bank Indonesia and all the committee, allow me, Nadira Titalia, to sign off, and we very much look forward to see you all again on another G20 Indonesia Presidency side event. Stay safe and stay healthy. Wassalamualaikum warahmatullahi wabarakatuh.